Good morning, traders and investors. It is Friday, September 12th. Hopefully everyone's had a good week. Brian filled in for me for the members' videos here. Did an awesome job. He did covered the markets. He's always got such a nice, fresh view and angle of explaining the markets, and he touched on Oracle in a detailed report. And I'm going to touch on it again today with my views and how that's bleeding over. But I was in Las Vegas, met with some investors, met with a friend, did some fun activities over there, and I am back and getting ready for the money show tomorrow, which I'll be presenting at. Anyways, let's jump into the charts. Got a few things to cover here. Markets are trading kind of mixed this morning. We have NASDAQ slightly positive, everything else is slightly negative. If we take a look at Oracle. So we covered that last night. Brian did a special report on Oracle, the big pop that we've seen. And you know, it's interesting. I like the CEO, Larry Ellison, of this. I mean, he's always under the radar. You don't hear too much about him. He turned into the richest man in the world with that big pop. Kind of Oracle, kind of just a sleeping giant, has kind of come to life. And of course, it's a news-driven move. It is good news. I think it was a shock to the system, hence the reason it just jumped so big. And now it's going to probably taper and pull back a little bit as people digest it. But now Oracle's going to be on the radar for traders and for investors to move into. It's probably going to re-energize maybe a bit of the tech space here going forward. So let's go and take a look over the broad market here and what's kind of unfolding when we look at today. So yesterday we saw FOMO on our indicators. FOMO pretty much all session, meaning people were piling in. They didn't care what price they bought on the New York Stock Exchange. People just wanted to buy shares. They hit a market order and they're just saying, get me in. I want to buy. And usually when we have that, the market has a little bit of a pause. And we're seeing that with the Russell 2000 right now. The Russell 2000 is down about 0.4%. And it's kind of, you know, not always, but pretty sensitive to the panic selling and the FOMO indicator. So I won't be surprised if we see the market pause and take a little bit of a pullback. As you can see, price in general is kind of the upper end of its channeling range. So it's kind of channeling to the upside. And now it's kind of at the upper end. So a little bit of a pause or pullback should be expected, not just in the Russell, but in the S&P 500, in the NASDAQ. We are seeing, you can see here, the futures having a move up this morning. We do have kind of like contract rollover month here, so it does create a pop in the future pricing. But in reality, the SPY is not really going to budge. You can see the gap down here on the 30-minute chart from yesterday's session to where the S&P 500 is now. If we go to, the SPY and take a look at the price action, and we look at the, let me just pull it up here. Here's the close of yesterday, and here's where price is right now. So it's actually pretty much, it's slightly down from where it is. So this is the kind of the 1 day, the little window here where the futures pricing and the ETF pricing can be a little bit off throwing for some people who don't understand how that is unfolding. But overall, that's kind of where we're at. Markets are digesting. We are seeing the S&P 500 had a very nice run yesterday, pushing up, and we're seeing some nice gains there. Now, we do have some interesting price action going on. XLU, if we look at XLU, this is the utility space, so we've seen it really pop and come to life. Now, the last time we saw it pop and come to life and starts to outperform the S&P 500 in a significant way. It was right at the end of August here. Get my cursor out of the way. When we see utilities start to perform, it doesn't mean the market's going to roll over. It just is a warning sign that typically we start to see money go defensive, move to these defensive sectors before there's a little hiccup or pause or pull in the market. So we've had a nice big strong strong rally in utilities. We saw the same at the end of August. And if we just go and look at what happened in the SPY for that same window, into the end of August, we saw the stock market really stall out, and while the XLU shot higher, and then the market had the hiccup and kind of a bit of a reset there. So we are seeing utilities and the stock market move up. That is a good sign, but we'll keep our eyes on utilities because it does tell us that there could be a little bit of a hiccup moving. Some money's moving into a defensive pocket, expecting something to eventually here break, but not anything to really be too worried about at this point. The other thing here, we've got unemployment rising slightly. We've got inflation data that was higher than expected and wanted. we got some mixed signals that are not exactly what the Fed wants to see, but people are expecting rates to be cut. Doesn't really mean it's going to translate over into mortgages or anything like that. But when rates get cut, naturally investors are moving into the IYR, which is the real estate ETF. If interest rates go down, mortgage rates go down, home prices can stabilize and go up, or maybe more home sales will take place. And so we are seeing real estate space move up with people anticipating a rate cut and thinking or hoping it will bleed over into mortgages. Obviously, also, if we take a look at the real retail space, XRT, this is moving higher, lower interest rates, potentially. It means people will have more money to spend. Maybe it won't hurt as much on a credit card, all of that stuff. So the retail space is continuing to move up as well from that. Now, if we take a look over at a couple positions here, XLC, this one has had a very nice move. It's pushed up. It's hit one of our targets. It's expanding higher. This is the communication space. This might have to do, I'm not sure if Oracle is in here. It probably is, maybe hence the reason it had a big pop. So it's probably helping drag this ETF higher. It looks like it's set to open higher again today. But overall, we've had a nice move here. It continues to run and kind of outperform. The other position we have with our band strategy is SILJ. Really popping and expanding. It has hit 3 of our targets, hit our 20% target there yesterday. So a nice move there. And of course, miners are really exploding. If you look at gold miners as well, they're all pushing higher and moving up. Whereas if we take a look at, let's just look at gold through the GLD kind of ETF lens here, gold's been taking a bit of a pause and just taking a bit of a breather, but it's primed and ready for another leg higher at any point. And when gold starts to take a leg higher, maybe we'll see the miners actually have their pause. They're kind of, money's usually going to be flipping and flopping between moving into physical gold and then potentially moving out of physical gold and into miners, and maybe miners will have some profit taking and that'll go into gold. So we might kind of see them piggyback on each other and work their way higher. And just a quick reminder, the Money Show is today and tomorrow in Toronto. I will be presenting tomorrow at, I think it's 11:45, somewhere in there, 11:40 tomorrow. I'm doing a book signing there as well. So if you want to show up and check it out, I'll be giving away some books, signing books with Ashley, and I will be talking the markets and what's going on. And last but not least, I want to touch on a couple things that a few members have brought up. So it's very easy to get FOMO in the stock market. And obviously, depending on what newsletter you're subscribed to or which one you're following, could be the ACS, could be BAN, could be both. I want to touch on something because we are seeing the BAN strategy perform fairly well. We're hitting some targets. But I do want to set the record straight because some of you are getting FOMO and wondering, some of you skipped the BAN trades and you're sticking with the ACS. And there is a good reason for that, is because that's what I was saying. That's what I'm doing. That's what the strategies are in favor, is the ACS versus the BAN strategy. There will be times where BAN outperforms, and there's times where it will underperform the ACS strategy. So I want to just reiterate and retouch on where I still think we are in this market. I still think we are in a stage 3 market environment. ACS and the OTS strategy are the 2 core strategies that can perform through all market stages and will do the best. Even if the stock market has performed really well recently and we're pushing up to kind of all-time highs with the indices because of AI, because of the because of the adaptation or implementation of AI and the big tech's dragging things up. The ACS is still the preferred strategy that is the most protective and will still perform better overall. But sometimes the BAN strategy, which is ideal just for a stage 2 bull market, might have a window where it works really well. So I know we keep hitting targets on our BAN trades, and those who are not with BAN or skip the BAN trades are feeling a little anxious, a little left out. Just keep in mind, let's step back. These are investing strategies, and if we step back and take a look, the ACS strategy, this hasn't been updated since July. We've closed out one set of winning trades. We need to add in the current trades once they're closed and update this. But this thick line here is the ACS strategy. We are pushing at new all-time highs for our accounts, and we pretty much do that every year. No matter what the market does, if it has a 20% 2022 bear market correction, we still continue to grind higher. If there's a 55% correction in 2008, we continue to move higher. That's what this strategy does. It's a consistent growth kind of strategy, and we compound small winning trades over and over. So we are hitting all-time highs. You should, if you're following the strategy, you've been with us a while, you should be the wealthiest you've ever been, and our accounts are pushing at all-time highs with our current open positions. So let's just take a quick look at our positions. Our S&P 500 position with the ACS strategy is in the money. We're pushing up. We're about 1% away from our first target, which I really, really want to hit because the markets are starting to give some warning signs that, the utilities is one of those things that the market could be getting tired here. So we need really just one more push to hit a target that'll allow us to sell half of our SPY position, lock in a gain, move our stop up to our entry price, and then we can totally relax and just let the trade mature. If we go and take a look at the market sentiment on the right-hand side, look at these red bars. This is giving some serious mixed signals. It's telling us that there is selling going on in the market. There's monies flowing to defensive pockets. The stock market is getting dragged up by more so tech. To some regard, it is a little bit of a broad market, which is nice, but we've got these warning signs. This market's in red territory. It's redlining, and so that's ideally what we want to hit. One more push, and we can lock in gains, and then we got a free ride. Either we make more, or we close the trade out for profit. Either way, we're good. And so that's what I'm really gunning for. If we look at the NASDAQ, we're about 1.4% away from hitting our first target there. Again, same type of thing. We've got some red in the market telling us that the underlying strength of the market is slowly weakening up here. And again, the NASDAQ is really just one nice day away. Same with the S&P 500. So we just need one good pop, and we're going to be sitting pretty, and we don't have to worry about what happens in the market. It's a small profit no matter what. It's just, can we make a bit more? So that's where we're at, and we'll just play it by ear, one bar at a time. Take care. Bye-bye.